Okay, next, in the manufacturing modules, we also set up routings. This define the exact step in production. For example, producing a safety helmet goes through assembly at the assembly line. By adding this step to the BOM, auto automatically generate work order when manufacturing order is created. This make production. Next, once the bill of material is defined, we also need to simulate the resource use in production. This is done by creating a work center in Odoo. We configure assembly line which cost of $5 per hour. By doing this, Odoo can capture labor and overhead expenses every time. Next is the capacity planning. In our step, the sprint line was limited to capacity of one order at a time. When multiple manufacturing order was scheduled, we could see bottleneck in the Gantt chart. This visualization help managers identify conflicts and reschedule. We also enable the master production schedule, which is the high-level planning tools. In this case, we forecast 200 units of safety helmet with a safety stock of 50. Or to calculate the suggested production quantity and which one click on replenish generated manufacturing order automatically. The manufacturing order represents the actual executions of production. In our case, once of sales order from safety helmet or safety glove. Okay, finally, after the manufacturing order are complete, we can clearly see the impact in the inventory modules. Raw materials such as helmet, sales, liner, fabric, and thread are reduced, while the finished product, helmet, and glove are increased. This confirms real-time integration across modules, sales trigger product, purchase, ensure raw material, manufacturing consumes them, and inventory show the result. At the same time, accounting record the production cost, which support profitability analysis.
Let's start with the financial accounting plus profit-driven challenge. So this is the chart of accounts and financial reports. Here we started by configuring the chart of accounts in Udo. This provided the foundation for recording all financial transactions such as sales income, purchases costs, and manufacturing expenses. Each transaction was automatically linked to the correct account, ensuring accuracy in reporting, as shown in the screenshot below. Let's head to the next slide. All right, so in this slides, we can see the updated profit and loss statement generated in Udo. Our total income was recorded as $13,750, while the expenses are shown as $2,400. Now that leaves us with a net profit of $11,350. This clearly shows us that how Udo captures all the transactions from both sales and purchases and automatically calculates the profitability without any manual work. All right, so this is the balance sheet. The balance sheet provided a snapshot of the business's financial position. It displayed assets, liabilities, and equity updated automatically as sales, purchases, and other transactions were recorded accordingly here. Alright, so this is our cash flow statement, which tracks the actual movement of money and out of the businesses. From the operation activities, we received advance payments of, as you can see, the screenshot is $141.14 and an additional $1,151.73 from the sales. So at the same time, we paid suppliers $705.71 and covered the operating expenses of $613.66. Now, these were some smaller inflows and outflows recorded under some unclassified activities. Overall, our cash position slightly increased. So closing at $14,795.52, this report gives us a clear view of the liquidity of how much cash is actually available to run the business. All right, as you can see in the CVP analysis, we extended financial analysis with a cost volume profit analysis in Excel, as you can see in the CVP table. And so using the ORU data, we calculated contribution margin and break-even point. This is the dynamic pricing demonstration. So here you can see that the dynamic pricing was demonstrated in ORU. We created a pricing rule where sale price is equal to cost multiplied by 1.2. So when the phone liner cost increased from $15 to $18, the price of safety gloves updated automatically. Here you can see that the price is $50 before, and then when we updated the foam liner from $15 to $18, the price changed accordingly to $46. Now in scenario simulations, you can see that we also performed a scenario simulation in Excel. For example, in case 1, raw material costs increased by 15%, and in case 2, sales volume dropped by 20%. These scenarios help us compare profitability and the different conditions and plan accordingly. Now this is the profit alerts. Finally, we explored these profit alerts in Uro. And in Uro, automated actions can be figured to trigger alerts when costs exceed certain thresholds. For instance, an alert can be set if storage costs go beyond $5,000. So this shows how ERP can provide real-time warnings for better decision making. All right, so these are the key outcomes achieved through this project. We successfully integrated all the key modules in Udo: sales, purchase, inventory, manufacturing, and even accounting. We also automated the entire workflow starting from quotation to sales order to delivery, invoicing, and also the payment. To support production, we implemented the bill of materials for both safety gloves and for safety helmets as well. This ensured accurate tracking of raw materials and finished goods. On the finance side, we generated important reports, including the cash flow statement, the balance report, the profit and loss statement, and we also explored advanced features such as dynamic pricing, scenario simulations, and profit alerts to support profit-driven operations planning. Overall, this project gave us a much clearer understanding of how ERP links different departments together to enable real-time decision making.
Okay, so now let's talk about the challenges faced and the solutions we came up with during the project. Now, as a first challenge, we first found some difficulty configuring financial reports such as balance sheets, cash flow, and such things with such limited data. Now, the solution we came up with is using available Udo outputs plus explained limitations during presentations. Another issue we have faced is that the price list automation and CVP analysis were not straightforward, meaning we have faced so many issues along the way. Now, the solution we have come up with is creating manual simulations, such as on Excel plus dynamic pricing demos, to show the concept clearly. Another issue faced was that we had data inconsistencies, such as we had missing costs or like missing requirements in some products, missing material needed for some products. Now, this issue was a pretty big thing in the project, so we have found a solution by adjusting the BOM and product costs to ensure accurate manufacturing plus pricing flows.
Okay, finally, is our project. We also reflect on the lesson we learned while working with Odoo ERP. First, we realized that ERP requires very accurate data entry. Even small error, such as a wrong product cost, can affect the either workflow and lead the misleading report. Second, we experience how powerful cost module in integration can be. In Odoo, one simple action like confirming sales order automatically trigger downstream process such as delivery, invoicing, and counting. Third, the hands-on simulations giving us a deeper appreciation of how business decisions rely on ERP data. We could see clearly that reliable data is the foundation of good management. Fourth, we learned that collaboration and clear role divisions in teams are just as important as technical setup. By splitting tasks across sales, manufacturing, and accounting, we are able to complete the project efficiently. Finally, ERP is not only a piece of software, but also a mindset. It's about integrating process for efficiency and transparency, helping organization work as a unified system rather than isolate department.